Hi, it's Peter Schiff. It is Monday, October 1st, 2012, and I'm talking to you today on behalf of my company, Euro Pacific Precious Metals. I have been encouraging everybody to buy gold and silver for years. I was particularly vocal about it in late August when the charts broke out on both gold and silver, and it became apparent to more people that QE3 was coming. Of course, I knew QE3 was coming the minute they launched QE2 because I knew it wouldn't work. In fact, I knew QE1 was coming before they even coined the term. I just didn't know what they were going to call it, but I knew the Fed was going to print money in a vain attempt to bail out the economy and stimulate growth. I know it's going to fail, but a lot of other people haven't figured that out yet. But what they do know is printing more money destroys its value, and if you want to protect your wealth, you need to buy gold and silver. So when the Fed actually came out with QE3, I dubbed it Operation Screw. A lot of people are calling it QE Infinity, but I don't think the Fed can do it to infinity because between now and then is going to be a currency crisis. You can't print an infinite number of dollars without completely destroying their value. I don't think it's going to go that far, but believe me, the dollar is likely to lose a lot of value before the Fed gets the message and stops the presses. So in the meantime, you have to protect yourself. Gold and silver prices have been rising recently, but it's not too late to buy. Specifically, I think a lot of investors in precious metals are overlooking silver and focusing mainly on gold. Well, I think precious metals should involve both gold and silver, and don't ignore the opportunities in silver. Don't focus on gold, which typically outshines it from a monetary perspective, but it doesn't always outshine it from an investment perspective. Right now, I think you have an incredible opportunity in silver. In fact, if you've missed out on a lot of the gold rally, one way to catch up is by focusing now on the price of silver. In fact, as good as the gold chart looks, the silver chart looks even better, particularly if you view the market in relationship to its 2011 peak. If you look at gold, for gold to get back to where it was at its high point last year, it needs about a 7% rally. Silver rather, needs almost, I think, a 47% rally to get back to the high from 2011. That's an extra 40% that you could pick up potentially in silver. And I would be very hard for me to believe that you can see a new high in gold without a new high in silver. And since I believe gold is going to make a new high, I think silver is going to make a new high too. And therefore, if both metals make a new high, there is much more percentage gain in silver versus gold. Also, historically, you can look at the relationship, the ratio between the price of gold and the price of silver. Over the last 25 years, that ratio has averaged about 45%. Right now, it's 52%. So in order for the gold to silver ratio to get back to its 25-year average, you need a 20% rise in the price of silver without the price of gold going anywhere. Of course, since I think the price of gold is going to rise, the price of silver would have to rise that much faster to get back to its 25-year norm. But even the past 25 years have not been the real norm. Go back to the 19th century when gold and silver still circulated as money in the United States. The average for that century was a ratio of 16 to 1. Think about where silver would have to be to get back to 16 to 1. In fact, I think at one point in 1980, the ratio got to about 13 to 1. In order to get to that peak, you're looking at silver, I think, at maybe $135 an ounce, assuming the price of gold doesn't go any higher. It stays where it is. Now, I don't know that we're going to get that ratio again. Remember, that was when the Hunt brothers tried to corner the market for silver, so that might be an aberration. Who knows? Maybe that's going to be the high point that silver will ever get relative to gold. But you never know. Maybe it'll retest it. But even if it doesn't retest it, it should approach it. It shouldn't stay down around 52 to 1. You know, in a real bear market, well, maybe you'd see the gold to silver ratio move against silver in favor of gold. But if you anticipate a bull market, and of course, we've been in a bull market for 12 years, and I think that bull market has a